really the causality or the chain of thinking is that higher inflation leads to higher interest rates, and then higher interest rates are bad for bonds. And so it's important to remember that when interest rates go up, bond values go down. When interest rates go down, bond values go up. Right? And so if you keep that in mind, you can understand that higher interest rates, all else being equal, are bad temporarily for bond prices. And a lot of people ask about this because essentially we've been in a bond kind of quote unquote bull market for 30 or 40 years, right? We saw an increase in interest rates in the 1970s into the early 80s, peaking at north of 15% for the 10-year Treasury. And then we've seen this sort of steady decline, right? Obviously, there are some movements within there, but broadly speaking, if you look at this chart, the 10-year Treasury yield since the early 80s peak has come down to the point where we bottomed out during the depths of the coronavirus pandemic at 0.5%. And so the question is, don't interest rates have to go higher? And the answer is, I don't know. I worked in the bond market for a long time. I was a portfolio manager there. I was a bond trader for a number of years. I don't know. I haven't met many people that are really good at predicting interest rates. I will say, and if we look at the next slide, which shows, I think, a little bit of a tighter range on the Treasury. So this is more just the last 5 years. You can see that really we were in the 2.5% to 3% range in 2017 and 2018. Like I mentioned, we fell to 0.5% before rebounding to today we're around 1.5%. And so the reality is although interest rates are exceptionally low here right now, they're in the middle of the range, right, of the last 5 years. And even if you went back towards 10 years, the range has really been, for the most part, between that 0.5% and about 3.5%. And so maybe interest rates do go higher. I happen to personally think that they might move a little bit higher, but I don't know if they have to spike towards 1970s, 8, 9, 10% levels.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.